In the dynamic and ever-evolving world of technology, navigating the intricate pathways to potential returns can be a daunting task. For investors seeking exposure to this expansive realm, the Vanguard Information Technology ETF, VGT, emerges as a beacon of clarity and opportunity. This behemoth ETF, meticulously tracking the pulse of a curated basket of leading tech companies, provides a potent and transparent avenue to capitalize on the disruptive forces shaping the digital frontier. VGT meticulously replicates the MSCI US IMI Information Technology 2550 Index, effectively granting investors a diversified stake in the largest and most liquid U.S. companies within the information technology sector. This index employs a market capitalization-weighted methodology, meaning the composition of VGT is heavily influenced by the size and market dominance of its underlying holdings. As of December 29, 2023, VGT boasts a staggering $285.5 billion in net assets, cementing its position as one of the largest and most respected technology ETFs in the market. Peeling back the layers of VGT reveals a veritable who's who of industry titans. Household names like Apple, AAPL, Microsoft, MSFT, Nvidia, NVDA, Broadcom Incorporated, AVGO, and Adobe Incorporated, ADBE, occupy the coveted top 5 slots, collectively forming over 40% of the ETF's net assets. This focus on established blue-chip players underscores VGT's emphasis on stability and proven track records. However, VGT's reach extends beyond these giants. The ETF delves deeper into diverse segments of the tech world, with holdings spanning semiconductors, software, internet services, cybersecurity, and cloud computing. This diversification mitigates individual company risk and provides investors with exposure to emerging trends shaping the future of technology. Since its inception in 1995, VGT has delivered remarkable returns, solidifying its reputation as a potent wealth-building tool. Over the past 5 years, the ETF has generated an annualized return of 16.24%, significantly outperforming broader market benchmarks. This stellar performance is a testament to the underlying strength and growth potential of the technology sector as a whole. However, it's essential to remember that past performance is not necessarily an infallible predictor of future results. The nature of the tech sector is inherently volatile, susceptible to booms and busts driven by technological advancements, regulatory changes, and broader economic conditions. VGT, though diversified, is still subject to these headwinds, and investors should be prepared for periods of turbulence. Investing in VGT offers several compelling advantages. Diversification: gain exposure to a broad basket of leading tech companies, effectively mitigating individual stock risk. Cost-effectiveness: access a diversified portfolio with low expense ratios, significantly lower than actively managed mutual funds. Convenience: enjoy the ease of trading a single ETF, compared to the cumbersome process of manually selecting individual stocks. Growth potential: tap into the long-term growth prospects of the ever-evolving technology sector. However, a well-rounded analysis demands consideration of potential drawbacks as well. Volatility: be prepared for significant price fluctuations due to the inherent volatility of the tech sector. Limited control: lack the ability to choose or exclude specific companies within the ETF's holdings. Concentration risk: the ETF's heavy weighting towards mega-cap tech companies exposes it to potential risks associated with their performance. While VGT undeniably presents a powerful tool for accessing the tech sector, it's crucial to approach it with realistic expectations and a diversified portfolio. Here are some critical considerations for potential investors. Investment goals: align VGT with your long-term investment goals, factoring in its risk profile and volatility. Diversification, don't rely solely on VGT. Integrate it into a broader portfolio, composed of diverse asset classes. Cost awareness, compare VGT's expense ratio to other similar ETFs to ensure cost effectiveness. Active versus passive, decide whether VGT's passive approach aligns with your preferred investment strategy. The VGT ETF stands as a cornerstone for investors seeking exposure to the high-growth potential of the technology sector. Its broad diversification, cost efficiency, and long-term track record make it a compelling option for both seasoned and novice investors. However, it's crucial to recognize that VGT is just one piece of the investment puzzle. Investors should undertake thorough research, evaluate their risk tolerance, and consider incorporating VGT into a comprehensive portfolio to navigate the ever-changing digital landscape with confidence. It's essential to acknowledge that while VGT boasts impressive historical returns, the future trajectory of the technology sector, and consequently the ETF's performance, remains uncertain. Several potential challenges deserve consideration. Valuation concerns. Some analysts argue that the valuations of many leading tech companies in VGT's holdings have become stretched, increasing the risk of significant corrections in the future. Regulatory headwinds. The tech sector faces growing regulatory scrutiny from governments worldwide, which could potentially stifle innovation and profitability. Technological disruption. The rapid pace of technological advancements constantly introduces new players and disrupts established names. VGT's focus on established giants may expose it to the risk of being overtaken by more agile and innovative competitors. Geopolitical uncertainties, trade tensions, international conflicts, and global economic uncertainties can significantly impact the performance of technology companies, ultimately affecting VGT. Understanding these potential challenges, along with VGT's strengths and limitations, empowers investors to make informed decisions. Here are some key takeaways to consider. Long-term focus. Embrace a long-term investment horizon when considering VGT. The technology sector tends to be cyclical, so short-term volatility should be expected. Active monitoring. Stay informed about emerging trends, regulations, and potential disruptions within the tech sector to adjust your investment strategy accordingly. Risk management. Allocate your assets according to your risk tolerance. VGT, while diversified, remains exposed to the inherent volatility of the tech sector. Diversification is key. Don't put all your eggs in one basket. Integrate VGT with other asset classes in your portfolio to balance risk and optimize returns. The VGT ETF undeniably provides valuable access to the dynamic and potentially lucrative world of technology. Its strengths should not be dismissed, but neither should its limitations be ignored. By taking a holistic approach, meticulously evaluating risk, and incorporating VGT within a diversified portfolio, investors can leverage its potential while mitigating its inherent challenges. Ultimately, responsible and informed investment strategies will allow you to navigate the digital landscape with confidence, harnessing the power of technology to achieve your financial goals.